Okay, guys, let's get back to work. 31st of July, 9:30 in the morning, UTC plus 2 on Solana USDT perpetual contract. Okay, we're going to be applying the same systematical approach, answering these questions. I want you to do the work first and then come back and watch me do it and take notes and then go over it again, knowing how to actually do it now, having watched my explanation. Okay, so what is the macro context? If I'm looking at the chart right here, I can clearly see a high time frame uptrend where we're trading high, low, higher, high. And from there, we created a very good looking, obvious range, okay? Where we have our range high and we have our range low. So this is kind of the macro context that I'm building on Solana. Uptrend followed by a range. Now, where are our high time frame POIs from a liquidity and a supply and demand perspective? So I'm going to just zoom in and search for some order blocks, okay? What I immediately see is that I have this nice daily order block right here that price actually already tapped into and got a perfect rejection from, okay? Absolutely perfect. It's also extreme supply because it's the last supply remaining before taking the range high, and they tend to give good reactions. And then below us, I basically see nothing but sell side liquidity. There's no demand, just lows being higher lows. And even locally here, I can see some sort of a liquidity curve coming up, okay? If we're going on a lower time frame, there are some demand zones right here. I see one demand zone right here, which is structure demand, leaving that inefficiency. And furthermore, there's nothing that much. We can check our volume profile, and we're kind of above our volume area high, okay? That's kind of it. Nothing that special. So this is how I would lay out the high time frame POIs. But it's very interesting that we just came into extreme supply. Now, what is our high time frame structure slash range if there is a range? So applying our most important structure within the range is obviously the structure for the most recent rotation from low to high in this example. So we have a high, higher low, higher high, higher low. This is not valid 18-hour structure because you don't have the 6 candle rule. And then from here, we got a move like this. So this is how we pull the range. In an uptrend, you pull it from high to low. And that's our high time frame structure, okay? Now let's zoom in for the mid time frame right here, mid time frame. So we're going around that 4-hour mark, and we can see, hey, actually, this was a range high, range low. And then we can see deviation 1. Let's extend it. And then we can see deviation 2. Let's double check if it was actually a valid deviation using our DL2 right there. Look at that. Stayed beneath that DL limit line. And we have a model 1. Now let's check if that model 1 was already confirmed. It looks like it was already confirmed. And we can see even if we just take general market structure from this uptrend, actually it's more important to watch this market structure, just the most local market structure. And we can see that right there on this low, we already broke structure. Okay, so this is interesting because we have a confirmed high time frame distribution that came into macro extreme supply, okay? And we have some demand below the range low, but below that, we have only sell side liquidity. So technically speaking, this is a distribution in premium pricing that could have a rotation all the way down towards the range low, sweeping all those sell side liquidity lows, okay? It is in the perfect location to do so, also tapping into extreme supply. Now, we're already in a confirmed distribution, so the people that have access to the VIP Discord exclusive course content know now about the bias that we're trading in, you know, about the environment that we're trading in. So zooming in, let's check now what is our mid time frame structure slash range. What's going on here? Okay, well, we're in a confirmed distribution. From the top down, we have structure on the 1 hour looking something like this, just a lower high and a lower low. Okay, so it would be very nice if we could continue this downtrend, putting in another lower high for a lower low, moving potentially all the way down towards this range low, because that is the target of this higher time frame distribution. Okay, So our mid time frame market structure high is right here. Let's put that on the chart. Right there is our mid time frame market structure. And locally speaking, we have somewhat of an uptrend from low to high, but this is most important. Now, let's check next. Let's grab that. Where are our mid-time frame POIs from a liquidity and a supply and demand perspective? So we do have that first market structure high created back inside your original range values. And the second tab high was your original range value. So you do have liquidity up here, but in order to come there, you have to break market structure, which is not that nice, right? So I preferably want to keep this downtrend and find some supply right in this area. Now, this wick in general is already some sort of supply because it shows sellers stepping in. So it's called wick supply. But is it also something on the lower time frame maybe? Let's zoom in if there's something in here. It's not really a 3-minute order block. Let's go on the 1. Just check the lowest time frame that's in here. Oh, look at that. So on the 1 minute, we do actually have an order block right in that market structure high, lower high area. Basically pivot point supply. Okay, so we have pivot point supply right there. So what I would want, what I'm already thinking right now is, hey, maybe we could have a lower high right here, maybe a low time frame TCT distribution schematic in here, confirming the lower high on the mid time frame structure, continuing this higher time frame model 1 distribution. See, we're really going beautifully from macro to micro right here. So let's check the low time frame. What is the low time frame doing? So on the low time frame, we're seeing some sort of an uptrend where we have a high and we have a higher low and a higher high. And it's kind of looking like this is trying to be somewhat of a model 1 distribution already right here, where you have your 1, you have your 2, and you have your 3, but there's not really any structure to confirm this. Let me check. No, there's no structure to confirm this because this is not valid market structure on the 1 minute applying the 6 candle rule. Okay, this is not valid because you don't have the 2 candles in the expansion phase towards the upside. So there's no really way to confirm this. Let's see what price did. Kind of looks like this model 1 is flowing over into that model 2, but again, there's no structure here to really confirm a distribution. And then we're coming lower, and then from there we take the high out one more time, tapping actually into that supply zone because price had a reason to come higher, hit that supply zone. So this fell, but it never confirmed even, so it didn't really fall. But it looks like this model 1 distribution going over in the model 2 did not hit its target, and then we went higher again, meaning this is somewhat of potentially a bigger range in the creation, applying the concepts taught in the advanced lecture where we were talking about low time frame schematics and low time frame ranges going over into high time frame ranges. You know, we had that low time frame distribution that barely hit its target or actually hit its target, and then coming higher again to form a higher time frame range. So if I go on the 10-minute, you can see that this whole distribution disappears, and we have a single market structure pull on the 10-minute. So on the 10-minute time frame, we can actually pull a new range from high to low. See how beautifully I apply every concept I have given to you in this public mentorship right here. So from there, we actually tapped it. Price had a reason to because that's a pivot point supply was there. So let's extend it to our deviation high right there. And then let's see how price is developing. So from there, we took that high one more time, indicating a potential model 1 distribution. And right here is our market structure low. Let's check if it's also 3-minute. No, it's not 3-minute structure. So right here, we close below it. It's not the best break yet. Let's wait for the other candle. And there you go. That's where we're getting the actual break of structure right here on that second candle. That's where you short. Your stop loss goes above that high. And then initially, your target is the range low. Now, this is only a risk to reward of 1.19, but we just went from macro to micro, and we already were in a confirmed high time frame TCT Model 1 distribution schematic, where you have your 1, you have your 2, you have your 3. We came into extreme supply from a macro standpoint, and we have all these sell-side liquidity lows waiting below us, right? We have some demand we have to beat in the meantime, but actually zooming in on this demand, you can already see that this demand was mitigated right here. Now we left it, we backtested, and we went higher. So I dislike demands that got mitigated on the lower time frame. So from there, I would draw a new structure demand area right here, and we can see that already got mitigated. So there isn't really proper demand as well. So this could really have massive follow through, right? This could really have massive follow through. So I would take this trade potentially all the way down to right here, this range low, which is the target of the macro distribution. So let's see how this trade developed and how we could have de-risked it potentially, because we did leave supply in the upper section of that third pivot point right there, which price could come back for. Checking, price is coming down, losing that range low. On the left, we don't have that much. It could come back for this market maker order block. I would call this a market maker order block. I said this in one of my lectures, but I kind of forgot exactly which lecture it was. But when you have, it was in the exclusive lecture, so it was in the VIP Discord, where if you have a market maker order block, you know, it's very nice to leave the range, come back for it, and from there reject from it. So that's what price did. Look at that. We came back for it, got that harsh rejection, stop loss, and the invalidation is above the third tap, and that doesn't change, especially if you leave behind good supply. And from there, we can see that price made its way all the way down towards the order flow objective of the macro distribution, which is that range low. There you go. So right there, see how going from that macro to micro perspective, applying this systematical approach, we can get this low time frame entry for this macro target. And right here, I would take 75% of my take profits would have been hit right there, and then I would leave 25% run for a potential move down all the way to that 113 area. Now let's get rid of replay mode, and we can see what price actually did there. So it's not that weird, guys, to sometimes have these trades that have massive risk to rewards, because, you know, the build-up was perfection. Premium pricing of the macro range, extreme supply mitigation, confirmed high time frame model 1, and we got the low time frame entry following our mid time frame structure. So definitely wondering if you guys got to the same conclusion as me, and if not, that's totally fine. Just go over the price action one more time, now knowing the information I've given you, and you can just put it in your chart yourself and go over it. So it's really just repetition, okay? It's really truly repetition. So see you guys in the next one.